Have you ever been on a crypto exchange and seen trading jargon like stop loss, limit order, or trailing stop? As a new crypto trader, it's highly likely that you'll come across unique vocabulary that you don't understand. To let you in on all things crypto trading, here are some trading terms for beginners you should know. A market order is an instruction to buy or sell assets at the current best available price in the market. Market orders are for when you want trades to be executed immediately, though a specific price is not guaranteed. For example, if you think right now is the perfect time to buy 1 ETH and hit the market buy order, the order would fill at the current best available price. But what does the limit order mean? Limit orders refer to setting down buy or sell orders for an asset at a certain price. Basically, you are instructing the exchange to buy or sell crypto when the asset trades at a desired price. Maybe you want to buy 1 BTC when the market price falls down to $15,000. You'll set your buy limit to $15,000 for 1 BTC, and the exchange will make the purchase only at the specified price or better. Limit orders are ideal for when traders want to buy an asset at a lower price or sell an asset at a higher price than at the current market rate. Though execution of your order is not guaranteed, as the price may not hit your desired level. Stop loss refers to setting a limit on the potential loss of a trade by liquidating your assets once the market reaches a certain price. Say you bought 1 BTC at $20,000 with a stop loss order at $15,000. If the market price drops below $15,000, the exchange will immediately liquidate your assets. This would limit your losses in the event the price of BTC continues to drop further. Take profit. Take profit, on the other hand, refers to setting a limit to buy or sell crypto at a price where your trading position is in profit. For instance, if you buy 5 BTC at $15,000 each with a take profit sell order for 2 BTC at $20,000, the exchange will sell 2 of your BTC when the market price per BTC reaches $20,000, thus securing you $10,000 in profit. Margin trading. This is a type of leveraged trading in which you borrow money from the exchange to enter trades. This allows traders to open positions larger than their allocated capital. Traders need to have funds in the exchange to put up collateral for this kind of trading. The goal is to use the extra leverage 2 times, 5 times, 10 times, or 50 times that the borrowed money gives to make more money when trades go well. However, if the market moves against you, margin trading can also lead to large losses very quickly, and in some cases, liquidations, making it a high-risk strategy. Are there more trading terms you'd like to know about? Let us know in the comments.